Hello, this is Dilantha from Beat Billions, and today we will try to find an answer to a very important question that has baffled many investors recently. So, why is Warren Buffett, who has a very good reputation for buying stocks when there's blood on the streets, is not buying anything at all? To make it clear, Buffett has not only avoided buying stock, he has actually dumped many stocks as well. For instance, he dumped airlines. As you can remember, he dumped Delta Airlines a couple of months ago, and many investors have categorized this as very unusual. But if you really dig deep, you can find here one chart that might have a simple explanation as to why Warren Buffett is not buying anything right now. So, what you're looking at is the ratio of total market capitalization to the United States GDP. Now, as you can see, Buffett, obviously we know is a person who is not looking at charts, but we have put this into a chart so that you can find it, so that you can understand it better. Not that Buffett is looking into this chart. So, according to what Buffett has said in previous annual shareholder letters, he considers the market to be significantly undervalued if this ratio is below 50%, and he finds the market to be significantly overvalued if this ratio is above 115%. And as you can see, the current ratio is close to 150%, meaning, according to this Buffett indicator, the stock market is overvalued. So, this could be one of the biggest reasons why Buffett is still reluctant to buy the dip. He actually did not buy the dip in March. And if you look at Buffett's asset allocation, historical asset allocation, you can see that over the last 5 to 6 years, the allocation to cash has soared to new highs. He is known to have an allocation that is geared towards having more equities in the portfolio, but over the last 5 to 6 years, the allocation to cash has been very high. And at the end of the first quarter of this year, he was holding on to about $160 billion in cash. So, a possible explanation, the only thing that we can think of is we can think of two things, to be honest. First thing is he thinks the market is overvalued and stocks might come down drastically, which might give him a better opportunity to invest in the market. And the second thing is maybe he's holding on to cash so that if one of his holding companies, say a bank or something like that, goes into financial trouble, maybe he can pump that money to save that company from a collapse, the similar way he did with many banks during the financial crisis in 2008. And you have to have another thing in your mind as well. Just because Buffett is not buying stock, does that mean that you should also avoid buying the dips, buying stocks that you think are undervalued? We don't think so. Why? Because both Buffett and his right-hand man Charlie Munger has developed a concept called the circle of competence. In this concept, under this concept, they are trying to invest in companies that they understand very clearly, very thoroughly. So most of the tech stocks and most of the innovative stocks, innovative companies in the market don't fall into this circle of competence of both Warren Buffett and Charlie Munger. But that does not mean that you should avoid those tech companies or those innovative companies when the stock price is low. So maybe Buffett is still waiting for the market to crash, but at the same time, he's waiting for banking stocks to crash. He's waiting for consumer staples stocks to crash, not the tech stocks. So many investors have the false impression that that all the tech stocks would come down drastically because Buffett is not investing in those, but we think the otherwise. So we hope you enjoyed this video and make sure to subscribe us to stay tuned, stay up to date on what is happening in US markets. Thank you.